Greetings, tax tip lovers, and welcome to this week's top property tax tactics in just 5 minutes. Come, gather round, people, and let me share with you some extraordinary news for property company owners, provided this week by Chancellor of the Exchequer Rishi Sunak on behalf of the UK government. This incredible news arrived with me by way of a text when I was in Croydon. For those who don't know Croydon, it's a quaint little fishing village just south of London. What I'm about to tell you is extraordinary. So starve your distractions and feed your focus, because here we go. Rishi Sunak's budget back in March introduced super capital allowances costed at 29 billion over the next 4 years. Loss relief carryback was extended to 3 years, which makes claiming capital allowances a potent tool in reducing corporation tax and triggering repayments of tax. Corporation tax rates are set to rise to 25%, which makes this even more valuable. When the legislation was first introduced, property companies were denied these super allowances. However, a late amendment to the Finance Bill on 18th of May has extended super capital allowances to property companies. The government website link is above for those who think it's all too good to be true. All of this means that property companies will benefit by way of a super deduction from the 1st of April 2021 for 2 years, and will be able to write off 130% of their expenditure on new unused main rate pool assets in the first year without any expenditure limit, and which would ordinarily qualify for just an 18% write down per annum. In a building context, that includes assets such as fire alarm systems, security systems, carpet, flooring, etc., etc. In addition, companies will be able to write off 50% of their expenditure on new unused special rate pool assets in the first year, again without any expenditure limit, and which ordinarily qualify for just a 6% write down per annum. This will only apply to construction expenditure where contracts were entered into on or after the 3rd of March 2021, and these rates are applicable to expenditure incurred on new assets between the 1st of April 2021 and the 31st of March 2023. Now, here's the part where you say, my accountant does all that. Well, call me insensitive, but I'll be gobsmacked if that's actually true. And in my not inconsiderable experience, most tax advisors generally claim nothing more than the obvious items. The key to all of this is early scoping to see if there is an opportunity to get cash back, and our team will do that for you for free. We work with specialists who are dual qualified in surveying and tax, and who work with you to develop your overall capital allowances strategy and agree the analysis with HMRC. If you own a property company, surely you owe it to yourself to investigate whether part of the Chancellor's 29 billion giveaway has your name on it. Your options are you can do nothing and stay in the exact same place and pay a shed load of tax unnecessarily, or you can follow the link above for a free power hour review with property tax experts, and we'll make your property tax planning like it was our own. Okay, that's it. Stay bright. Catch you again for breakfast next week. Ta-ra.